Good morning, Christine Potocny here with William Ravis, and as we all have heard, there's a buzz in the news about a 50-year mortgage in the horizon. So today I thought I would sit down with our mortgage lender at William Ravis, Frank Marola. Frank, thanks for joining me this morning.
Thanks for having me.
So I'm going to put him on the spot for a few times, to ask him some questions that everyone may be wondering about this 50-year mortgage. So Frank, let's just get right into it here.
Okay.
The Federal Housing Financing Agency calls this a complete game changer and said it's a broader strategy to address housing affordability. Do you agree with that?
I think it's going to help a certain amount of people. President Trump announced on Truth Social that this program could be coming soon to the United States. It's already available in other countries, including Japan. And I think you have to just take the bias out of it, look at the numbers. It's not going to be for everyone, but I think for a certain population of people, it's definitely going to help with some housing issues.
Okay, so let's see. It will help first-time home buyers, do you think?
I think so.
Young first-time home buyers?
I think so. I think if you're monthly payment sensitive, what the 50-year does is it gets your total monthly payment lower than a 30-year because it spreads it out over a longer period of time.
Okay.
So if you're looking at the monthly payment saying, geez, $4,500 is just too much, and this program can make that payment, $4,100, then I think it's a door opener for those younger buyers and those first-time buyers that have never owned a home.
Okay. So do you think it would be helpful for people who are looking for a second home?
I'm not sure. And the reason why is, generally speaking, the rates on second homes are slightly higher than primary. The only unknown about this is we don't know what the interest rate is going to be. We do know that on a 15-year, the rate is lower than a 30-year. Mm-hmm. So we just don't know if this 50-year loan is going to be slightly higher in rate or much higher in rate than a 30-year.
Okay.
That's the only variable.
So I did a little research. And as we know, living on the Cape, if you're a first-time home buyer, you're going into a home that is definitely starting at around $550,000.
Yep.
So let's just say the fixed rate is at 6.25.
Okay.
So they're saying if you did a 30-year loan, your mortgage payment is going to be around $3,300, a little over that. Mm-hmm. And if you did a 50-year loan, your mortgage payment would be a little over $2,900 a month, mm-hmm. which reduces it to, you're saving over $300 a month, which is significant if you're a first-time home buyer.
Agree.
However, the total interest on a 30-year is roughly over $669,000, and the total interest on a 50-year loan is $1.2 million.
That's substantial.
Yes, it is. So I'm a first-time home buyer. I'm coming into your office, and what are the best options for a loan? Like if moving, they're thinking that this may come to fruition in about a year. Mm-hmm. So let's say we just fast forward a year and this is on the table. Is this something that you're going to suggest to a first-time home buyer? I know that in Massachusetts, there's Mass Housing, mm-hmm. and there's FHA, first-time home buyer, correct?
Absolutely. What I would do is exactly what you did. I would tell them, this is the numbers. If you do a 30-year fix, this is what your payment is. And if you do a 50-year fix, this is what your payment is, and show them the difference. I think that the people that are monthly payment sensitive would like to go for this program because they're not really worried about the total interest paid. They know that the home's going to appreciate, and who's going to stay in a house 30 or 50 years? Chances are you're only going to be there 5, 10, or 15 years, and the home is going to appreciate. And I also think that the people that are this young generation that invest in Bitcoin and stocks, they may say, I'll take the 50-year because what I'm going to do is I'm going to invest the difference, and I'm going to be way ahead if I invest the savings into something like Bitcoin or the stock market.
Right.
So I think for the first-time buyers, never owned a home before, monthly payment sensitive, which is Cape Cod, it could be a big win.
Okay. Now, I know another concern that people have talked about is equity. Mm-hmm. So talk to me, I'm coming in, first-time home buyer. I'm going to have to go for a 50-year loan.
Yep.
And how does that affect the equity in the house?
So this 50-year does build equity slower. A smaller percentage goes towards principal every month than a 30-year, so you are building equity slower. However, rates are expected to go down in the future, 2, 3, 5, 10 years, and you could always refinance from a 50 to possibly a 30 or a 20. If rates do the right thing, maybe keep the monthly payment the same. Mm-hmm. I think if you're somebody that's you watch what credit cards you get and you don't like to pay interest and you don't go to Starbucks and pay $5 for coffee. You brew your own coffee. You watch all the figures. This isn't for you because the total interest is going to be substantially more.
Yeah. So the bottom line is if you're a first-time home buyer, there are options for you. And the best thing to do is to reach out to Frank or a lender that you're comfortable with, that you already have a working relationship with. So if you need any more information, just drop me a line in the comments and I will be happy to forward you Frank's email. Thanks for watching.
Thank you.